Alasdair, in another Kitco article, the headline read, Wall Street sees an unstoppable juggernaut. Central banks are not slowing down on buying gold, and as you can see from the falling gold to silver ratio GSR, retail investors are in the early stages of beginning to wake up. Retail investors buy gold and silver. Silver is moving. Guess who is starting to buy? Alasdair, your comments.
Yes, I think this is very early on in the whole situation. If you look at the level of outstanding ETFs, because that's the way in which investment managers buy gold, it's probably about 0.5% of all portfolios around the world, global portfolios. So we have a situation now where the big banks, are turning bullish on gold. I mean, if they'd listened to the three of us some time ago, they would have turned earlier. But no, they are now turning bullish. And I think it's partly they can see some of the dangers emerging from the political side. For example, the threat to the Fed's independence and so on and so forth. They're also beginning to realize that bond yields actually reflect risk, not economic prospects, which is a very, very important distinction. So if we get higher bond yields because of higher risk, and we can see this risk beginning to escalate, then this is going to undermine the entire credit system. It's going to pop the credit bubble. The implications of that are really quite interesting. Let's put it that way. Now, the banks, I think, partly for that reason, and also when they look at the charts, they can see, gold is rising, silver's rising. This is unstoppable. I mean, you don't need to be a brilliant technical analyst to arrive at that conclusion. So, I mean, it's an easy call for someone who, let us say, is the chief strategist at Goldman Sachs or Bank of America or Citicorp. But the problem is that these guys are managing, or rather their investment management departments are managing over $1 trillion of portfolios each. And how much have they got? Zero.
You're right.
I mean, they're all in the wrong thing. Now, it's fine being in the wrong thing as long as the wrong thing continues to rise. You can say, well, I'm doing all right with my Nvidia and so on and so forth, for my Bitcoin maybe. But the moment that bubble pops, you're left exposed. And I think this is a danger, which increasingly investment managers are just beginning to wake up to. And that's going to create a real crisis, because where is the bullion? I mean, China's cornered the market, and where it hasn't actually cornered the market, the Russians have got quite a lot. On top of that, central banks in the Shanghai Cooperation Organization and BRICS and the Global South can see what China is doing, and that the world will move on to a yuan gold standard, yet to be defined. But, you can see that the footsteps are there for this to be in place. So they're all buying bullion. Or put another way, they're dumping dollars.
Dumping dollars, yeah.
Other currencies.
Yeah, absolutely.
So, and for in the investment management community to begin to wake up to these developments is too late. So this is buying that's yet to happen. And if this does occur, it will drive gold bullion prices, silver bullion prices considerably higher, probably higher than really justified by the negative events impacting fiat currencies. So, there is a bit of a bubble, I think, in the making here. I don't think we're in bubble territory by any means yet, but you can see how investment flows might create that situation for bullion.
It brings me back and reminds me of the situation that As Good as Gold were in 2020, 2021, when gold and silver from the Perth Mint, we were waiting 4 months. This is at the extreme of it all, but we were waiting 4 months after payment to get delivery. And the world market was in an okay scenario. This is not an okay situation. So, all I can say to people that follow us is that don't wait. start a self-managed super fund here in Australia. Get your money out of the ANZs and whatever, the general stuff, general stocks and shares, and start buying some gold and silver, because you won't be able to buy it, mate. Probably not. Certainly not this price. Certainly not this price in 6 months' time.